back after being out running, and I thought to myself, we need to talk about inflation and make it easy for people to understand. There are so much going on in the media about inflation numbers, stock markets are getting affected. The Fed are watching the inflation to readjust the interest rates, etc. A lot of information out there, and to make it easier as a consumer and as an investor, we need to understand the basics of inflation. And another thing I want to analyze and take a little dive into is the 2% inflation goal. Most countries has a 2% inflation goal, and I want to know, why do they have that? Is it something good? Are we really being told the truth about the 2% inflation goal? What's the long-term effects of having such a goal? Okay. Sometimes I use ChatGPT as a tool to break down my thinking and come to a conclusion. So what is inflation? Okay. So what we can say is the general level of prices of goods and services rises over time. So this leads to a decrease in the purchasing power of money. In simple terms, as inflation goes up, each unit of currency buys fewer goods and services. So this basically means if you just save your money, if you have $100 this year, you will get, for example, a certain amount of food for the money. In 1 year away, 2 years away, 3 years away, you will get less food for the money you have saved. So that $100 will buy you less food. So this is like the simple introduction. So basically what they say as an example here is, if you have 5% inflation, something that costs $100 today will cost $105 after a year. So the short-term effects of inflation can be significant, but it's obviously just a year. But if you have that interest rate compound year after year after year, you will get a lot of percentage in increase over time. So that is something that is hard to comprehend. So that's, for example, if I say, so if inflation is 5% 15 years straight, how much is compounded effect? So here we can see that over 15 years, if the inflation is 5% every year, the inflation or the price will increase 108%. So if you save your $100 in 15 years in a country which have 5% inflation per year, that's not an insane amount. In 15 years, you will have to pay double the price for the food. So you will get half as much bread, half as much whatever you buy. So that just shows that immense power of inflation. And we say that every country, almost in the at least Western world, wants a 2% inflation goal. Do the same calculation with the 2% inflation. So this is like the base. Here is where we want to be. So even in most countries, when we say the inflation is perfect, it will be a 35% increase in price over 15 years. So this compounded effect is very big when we talk about inflation. So you actually lose a lot of buying power if you save your money. And why is that? Why does most countries have a 2% inflation goal? So the reason they have that is they want to avoid falling prices, And obviously, as a consumer, I would say, oh, nice, falling prices. It's great if the meat gets a bit cheaper. Maybe it gets more cheap to buy a house, etc. It's cheaper to take a loan. So why is it so bad with falling prices? Well, they say that through economic theory, etc., lower prices can lead to lower spending because you expect the price to go down in the future. So why buy something now if you can wait and buy it later? Deflationary pressure and tends to lead to people just keeping their money, and how this economic system overall in the world is built. It's built on debt, it's built on growth. So economists are and leading politicians are afraid that this will cause problems for growth, etc. So basically, they think that 2% inflation is stable enough not to erode the purchasing power too quickly. And also, number two here, economic growth support. So it encouraged spending and investment instead of hoarding cash. So that was what I was talking about. So basically, it's a stimulant for growth. And also, people feel like if they get a 3% salary increase, it feels better, even though the inflation is 2%, instead of a 0% inflation and 1% salary increase. So you kind of get a bit tricked by it. Also, it's something called monetary policy flexibility. So a 2% target gives central banks room to cut interest rates in a recession. So you can say that by doing this artificial pushed inflation, you in a recession can lower the interest rate with near zero inflation or deflation. They cannot do that in the same way. So this kind of just want some flexibility for the politicians in different times. And also, they say that 2% target includes a buffer in the case of actual cost of living is slightly underestimated. So that is kind of telling us that 2% is a quite low target. So this is basically the reason why you want the 2% target. But there are a cost, there are a price, and that price is if you save money, you get punished a lot. And the long term effects can be a bit more severe. Because what happens if, for example, um, the government of a country use the 2% inflation to borrow more money and spend more money on welfare, etc. Because in the end of the day, everything is getting more expensive, so it's better to consume at the moment. Well, you get a long-term debt curve just accelerating, and that is what we are seeing in the world now. So, and also, if you have a lot of innovation, as we have had the latest 30, 40 years with cars, with efficiency in management, efficiency in technology, etc., we should have a deflationary pressure that is sound, that is not bad for economy. Deflation doesn't have to be bad. In some cases, it's very good because we want some things to be cheaper. So we want things to be cheaper. We want our mobile phones to be cheaper. We want our computers to be cheaper, microchips to be cheaper. We want clothes to be cheaper. It's not just bad with deflation. So I feel like the economists and politicians are pushing too hard on this 2% target. If it's a healthy deflationary pressure, I would not be too critical to see the inflation be around 0% or even less. So what I want to ask ChatGPT here is the 2% target actually taking more than 2% from us? Because in this 2% target, they do not count for the deflationary pressure that modern technology has on us. So let's see if I can get that point through to you. So Mm. Inflation not transparent. So what I'm asking here is if 2% inflation is transparent or not. I feel like it's something that's going on here that we are missing. So basically what chat are telling me is a very increasingly relevant question. It's very insightful, and yeah, 2% inflation may be masking or offsetting the national deflationary forces driven by technology and innovation. So for the politicians to say, oh, 2% has to be the target, they can use more money to spend on things that can get them reelected. And that is just not the services for everyday people. It can be promises made for them to be elected to companies, to certain areas. So they are spending money that could have been going into your pocket instead of getting eroded by 35% in just 15 years if you have 2% inflation. But if you have 5% inflation, obviously more than 100% of the buying power are getting eroded. So you will get half. It will be double the price, basically. So here's what's going on. Innovation is deflationary by nature. So basically, technology and technological advances like automation, AI, etc., the miniaturization in semiconductors, it lowers the cost actually to producing goods and services and increase productivity. In a purely free market, this would lead to lower prices, very good for the consumer. If we don't, our salaries could be flat, but we could buy more for our money. That would be very good. It can increase real purchasing power and make the economy overall more efficient. So we don't have to push the BNP to insane levels and get it better. So something is off here in the modern society. We feel like, oh, we get 3% salary rise, etc. But in the reality, this 3% salary increase is actually money that we're losing over time. So if we don't use up our money immediately and are forced to spend it, we will lose a lot of money. So the system are kind of broken in a way because it forces us to spend. So that's not a natural spending cycle. So what this means is more debt is getting into the system, and the debt leads to inflation, and the inflation leads to everyday people require them to spend more just to keep them BNP in the economy going up, and that leads to people getting a job at the moment, but that leads to more debt, and we have like an inflationary spiral. And this is how the economy has been working for at least since the World War II. So I guess it works. It spurs innovation. It brings the economy forward. But we are getting closer to hitting a wall. So this is not how it can continue forever. And also, we must know that having inflation like this and just demonizing deflation in every certain in different ways is not the way to go. If we have a normal deflationary pressure, deflation do not have to be something bad, and we can actually start to erase some of the national debt that a lot of big countries are getting. We have Japan with the biggest debt to GDP in the world. We have now USA with about 120% debt to GDP if they also include like the states and the municipalities, etc., and the federal level. So this is getting like out of hand. We can't keep pushing the system like this with more debt. So we have to start understand inflation, and actually politicians can't use the inflation to print more money and to promise things that can't be sustained over time. So why does central bank still target 2% inflation despite all this? So, despite these innovations, they deliberately aim for positive inflation to avoid deflation. They are so afraid of deflation, even though I said some deflation is good, because they are very, very afraid for a deflationary trap that people delay spending and that will crash the economy because the economy has been so um, so used to this type of artificial boom. Also, they want to keep normal wages sticky upward, so it's easier to raise wages slowly in a 2% inflation world than to cut them. So that will keep people happy, even though it's like fake. They can maintain debt sustainability. They are telling us that mild inflation helps reduce the real burden of government and household debt over time. Obviously, high inflation is the worst, but mild inflation can actually be more dangerous because it masks the problem for the government, and they can keep spending money they don't have. And they can, because it's inflation, they spend the money now because it gets the the loan gets more expensive over time. So it's better to spend the money and get more out of the money now than saving for the future. But in the end, that's not sustainable. So, in short, central banks intentionally override national deflation to keep the system functioning within current financial and policy frameworks. And is this non transparent? To some extent, yes, because this is where your point becomes more philosophical and political. So, my point that I talked about earlier. Price inflation and cost of living often diverge, so CPI may underrepresent housing, education, and healthcare costs. See? So, some inflations can be a lot higher, but so the cost of living can be a lot higher. We have seen this after like the COVID-19 situation in the world. We hear about numbers like 2% inflation, but we feel that our purchasing power has been eroded so fast, so much that we're not talking the same language anymore, like economists and politicians versus what we call normal people. So the cost of living has really increased a lot, but the inflation doesn't really support that, and that is because the deflationary pressure is somewhere else, is in the tech and the innovations, but the price increases is on the normal person. So this is very frustrating for a number of reasons, and it causes strange strains in the society, and we can feel like the disappointment getting getting up to the surface more from people. Also, central banks don't clearly communicate the part of the 2% inflation targets that absorbs innovation's cost lowering effects. And I feel like this is sort of, some people call it stealing, but at least this is so far from what people think about that it should be made a lot more transparent. Um, we should be told that it actually is not necessary to have a 2% inflation target that we are taught. It could very well be a 0% target or a minus target, but this is how the economy is built to support the promises we have. But if we did analyze this through a different perspective, maybe we could avoid the debt crisis that the world has been slung into at the moment. Many people feel like their real life costs rise faster than official inflation data suggests, creating a trust gap. And this is where we are now, and that do not work, and that can lead to conflicts in the world, to war, etc. So we need to get our hands on this situation right now, and maybe long term readjust how we think about this type of um, problems and topics. So without a 2% target, well, if we let innovation fully express itself, prices could fall naturally. Consumers would benefit more visibly from efficiency gains. Tell me in the comment section or something if you don't agree that's something good. But we would need to rethink debt, wages, pensions, and policy tools in a deflation leaning world. So that would be another way of thinking, and we need to readjust through philosophical and economic theories how we build that type of world. But I feel like long term we need to do something now and not just push the BNP numbers with public debt and money printing um, from um, from the Fed, the national banks around the world. So yeah, so central banks, and in the bottom line, yeah, basically what I'm told here is you're right. 2% inflation may act as a buffer against innovation-induced deflation, but that fact is rarely made transparent to the public. I think it should a lot more. Now we're spending money that could be and should be readjusted back into the pockets of the people. And also, you must know that if you have this inflation going on over time, how does everyday man or woman save? Obviously, we do that through investment, through investing in stocks, etc. This is a part of what this channel is about. You need to think about these type of topics. You need to invest your money if you don't want the money to be eaten by inflation. You have 35% of your money getting eroded in 15 years just in an environment with 2% inflation. But if you have 5% inflation, that's 108% in 15 years. Prices increase. So you need to do something about it. And that basically means that we are forced to invest in stocks, in companies, because they at least bring us back more than inflation if we invest decent. But should you be forced to invest? I'm telling you, this is the tools we have now to guard ourselves against the modern monetary system. And you need to read about and think about investment and how you do to readjust to the world and how it's built. You need to know how the world is working to not get frustrated. But should we have a world where we are forced to put our money in, for example, stocks, or shouldn't we being able to save if we want to? We do not need this artificial debt driven economy. At least that is very hard to sustain over time. And yeah, this is actually reflects a deep trade-off between technology deflation and the stability of our debt-based inflation adjusted economic system. So this is what I want to talk about today. A little introduction about inflation and what it is, and then take a bit deeper dive and some, what can I call it, philosophical insights about the 2% inflation target and what it actually means for you, and also why this information is important to you. And obviously, if you watch this channel, you need information to being able to make better investment decisions. And now you know why is investing in the stock market is a useful thing to do in the modern society. And the last thing I want to say is having the inflation and going on like this actually is the reason why rich people are getting richer and poor people are getting poorer. Because in the end of the day, the people with money in the stock market most often is the people with who can afford it. So this type of inflationary pressure will lead to an increase in stock prices over time, because the stocks, if the company are run good, will increase more than inflation, and that means that the people that don't invest will just be left behind. Thank you very much.